The Digital Banking Podcast is powered by Tyfone. Tyfone is a dramatically better digital banking provider. Our appeal is unique. We collaborate closely with our customers and the banking ecosystem in an open approach coupled with a powerful user experience that helps get things done. On our podcast, you will hear how digital banking plays a leading role for community-minded financial institutions from the unique perspectives of our industry expert guests.
Hello, and welcome to another episode of the Digital Banking Podcast. I'm your host, Josh DeTar, the VP of Sales and Marketing for Tyfone. Today, I am super excited to have Amber Harsin on the show. Amber is the CEO at CUProdigy. Amber, thanks for joining me today.
Hi, Josh. How are you doing today? I'm super excited to be here talking to my friend.
I know. When we kicked this off, I was starting to think through who are the fun people that I love just chatting with, and your name was at the top of the list. So I've been really excited to do this. And for our listeners, Amber and I were talking a little bit in the green screen room beforehand, and I had to stop her. I was like, oh my gosh, this is such good stuff. I can't wait to hear about it, but we have to get it on the actual podcast. So Amber, before we jump in, to give our audience some background on yourself, can you tell us about some of your past experience and what your day-to-day life is like at CUProdigy?
Yeah, absolutely. So as Josh mentioned, I'm the CEO of CUProdigy. That's a new role for me, or relatively new. I guess I'm climbing on the 6-month mark. I was asked to take over the organization back in March, but I've been with the company now for 6.5 years. In a ton of different roles, pretty much everything, which mimics really my life before Prodigy as well. Prior to my time here at Prodigy in the core, I actually grew up in the credit union space. So I started at a credit union as a drive-up teller 2 weeks after I graduated from high school, held various roles all the way through college, left for a minute. It was a mistake. It was 2 years that I can't get back into the medical field and thought that was for the birds, not near as fun as I expected, and jumped right back into credit unions and started to take on some management and leadership roles at that particular point. So from there, started as branch manager, moved into project management and then mergers and acquisitions and then digital service management and really working with all of our technology stack. Which is where I got introduced to Prodigy. Those of you who might be listening who know me know that I'm an opinionated person. And when you're going through a core search at a credit union, if you're overly opinionated, you may find yourself voluntold to run your core conversion, which is what happened to me. And we happened to be converting to Prodigy. So I got to learn that system and the people that worked for the CUSO really well. And an opportunity presented itself 6 years ago for me to join them as a member of the conversions team. And I thought, you know what? I really love credit unions and I've loved helping my members here at this one credit union. But going to something like Prodigy will let me help lots of members and lots of credit unions to look at the technology that they're leveraging. What is their digital strategy? What is their technology strategy? How do I help them use that to grow and stay relevant over time? So it was a perfect opportunity for me to do that. And I've been here ever since and now get to be in charge. So it's been a cool story in that way.
I love that so much. And I think it's going to speak volumes to why you're so passionate about the credit union industry and some of the topics that we're going to talk about today. But before we do, for those who are not maybe familiar with CUProdigy, could you give us a little bit of background on the company?
Yeah, of course, I would love to. So Prodigy is a core data processor, not exactly the type of vendor everyone loves to hear from. I understand we're kind of viewed as a necessary evil sometimes, but we're super unique. And what I love about who we are and what we do is really based in our history. So Prodigy was formed almost 30 years ago now when a group of credit unions got a really ugly phone call from their vendor that said, hey, we're declaring bankruptcy. And we don't know where you're going to go, but you're going to have to figure it out because we aren't going to be here, which was not exactly the way they wanted to start their day when they got up that day. But they got really creative. They started looking around and they didn't love the options that were out there with a lot of the publicly traded organizations and what was going on in the market at that time. So they got creative and they said, you know what, why don't we start a CUSO and why don't we buy the software? Like, we like the software. We are happy with what it's doing. Why should we give it up? So they did, and they made a really bold choice, especially for the credit union size. They were pretty small, most of them under 50 million at the time, to do that. And really jumped in with both feet into taking on a business that they really didn't know what it was like to run a core, and have done such great things with it in the last 27 years that we've been around. So we're super excited about that. The CUSO model has really spoken to the collaboration and the strength of credit unions when they band together in giving them technology. And it's allowed us and really framed for us the opportunity to do some really different things that you don't see in this space very often. Things like a full rewrite from the ground up. About 10 years ago, we just threw everything out the window and said, we've got to modernize everything. It's got to be open. We need to make sure we have access to data, that we can keep things updated really easily, that we can integrate with anyone we want to make sure our credit unions can meet strategy. We did it. We looked at pricing and said, how does the market do pricing? That's silly. We don't like that. It's nickel and dime. It's really secretive. It's a lot of negotiation, and it's who's just the best negotiator. We said, let's get rid of it. Let's set a per member per month price and then advertise it. Let's make it public so everybody knows what they're doing. And those types of decisions were really the genesis of those credit unions coming together, and the power of what it means to be a credit union in this type of space, and allowing us to run with some really cool technologies and some really cool business models and philosophies that align back to their business models too. So we're super excited to share a little bit about that message and what we've been doing as a CUSO over the years, as we go out into the space and keep making those crazy decisions that not everybody else wants to make or do, so that we can help serve the credit unions and then ultimately their members. And ultimately, those members are our friends and family too. So we want to make sure that we tie that all back together.
I have just so much respect for that. I think hopefully you know that in the conversations that we've had in the past. I think the way that you approach things is a really fresh approach. And I know that probably sounds super cliche and overused, but I think it's a really applicable saying here. And I think people would love to hear this story because I found it fascinating. You jumped into 2020 with the trifecta. Here's the CEO role, here's a global pandemic, and let's throw an earthquake on top of it.
We did.
What was that like for you?
Yeah, my first 30 days as CEO were pretty monumental in that regard. So as Josh mentioned, March 1st, I got named into the CEO role unexpectedly. Our prior CEO got called on a religious mission. So this came out of nowhere. Weren't expecting it, weren't planning for it. But thankfully, I was really blessed and honored that the board chose me to take over for that particular role. 14 days later, the NBA shut down thanks to COVID, which was a pretty big trigger. As everyone knows, that kicked off Disneyland closing, right? And all these places, all these really large organizations making these decisions and getting faced with how do you protect your staff and the public. So within that first 15, 20 days, I had to make the decision of what was I doing with my staff? Were we canceling travel? Were we going home? All of those crazy things, which we did. And in light of that, also ended up a week later suffering through some earthquakes in the Utah area that were fairly significant. 5.2 for the first one, and then a series of 1,000 aftershocks after that.
Yeah, that's crazy.
Every business continuity approach that you possibly could. A succession plan, a pandemic, an earthquake. And then to boot, we also had our core conversion scheduled for the end of that month that we had to pivot to a completely remote installment in 22 days. So it was crazy, but my team did such a good job. They pulled it all off. The credit union that had to be, unfortunately, the guinea pig for that did a wonderful job of keeping their team sane and safe in the unknown turmoil we were in at that time. I'm really proud of all of them and super happy that we got to partner with that credit union through that process. I couldn't have asked for a better one to take through that. So yeah, if you need like business continuity, disaster recovery, planning stories or experience, I'm happy to share.
It's so funny. You think about that. I can't even begin to tell you how many times we've gone through due diligence documentation sharing with our credit unions. And they always ask for the business continuity plan. And I don't know, a part of me in the back of my head always laughs and goes, yeah, these things never get enacted. And then 2020 was like, hey, that business continuity plan thing you got?
Yes.
Let's see about that.
Yeah. 2020 is, I don't know. I just keep waiting for the swarm of locusts or something to join us because no one will bat an eye. I mean, let's be realistic. Alien tomorrow and we'd be like, cool, it's Thursday.
Yeah, exactly.
Thursday 2020.
As long as you guys didn't bring any other COVID with you,
Cool.
You can stay. You're
Welcome
fine.
to the party.
Welcome to the party.
What did you bring to the potluck?
Yeah. They'll probably turn the ship around. They're like, oh, just kidding. Change their mind.
Seems troublesome here. We're going to go.
Well, I think it's pretty apparent that you're a quite passionate and unabashed person. And I appreciate that opinionation that you have. And I think that's one of the reasons why I always love the conversations you and I have, and why it was so easy for me to say when we started this podcast, I've got to talk to Amber. And I mentioned we were talking a little bit about just how that passion manifests before we actually kicked off the podcast, and that you really and truly believe in the credit union motto of people helping people, and how that plays into just the importance that they have in the foundational pillars of financial health and stability for communities across the US. Talk to me a little bit about that.
Yeah, let me start with where that passion originates from. And Josh, you don't know any of these stories, so this is going to be new for you too.
All right.
Some of my passion obviously comes from working in the industry, right? I was super young when I came into the industry and really grew up in it. But it's deeper than that for me when I think about what does a credit union mean to a community or to a family. Growing up, I didn't grow up in the most affluent home. We were oftentimes on government assistance and things like that. At 16, I actually ended up pregnant, kicked out of school, didn't see a real bright future. We were homeless for a period of time during that as a family. And those things all culminated over about a 24-month period where I was able to get back into school and get graduated, and a credit union gave me a chance at a job. So it starts there for me. That's
incredible.
Ignited some commitment and loyalty to that anyway, because they helped, unbeknownst to the credit union that I was working for at the time, they really gave me the leg up that I needed personally to take care of my responsibilities and make something of myself. But in addition to that, they taught me so much about how to handle finances that I hadn't learned from my parents. They didn't know those skills, so they couldn't pass those things on to myself and my siblings. I got those from having to learn how to help counsel other members through those types of events in their life, and how to have good credit and how to balance a checkbook and all those little things. And those things have really added up for me over the years as I've been part of helping other people overcome those challenges, as I've stepped up higher into a more holistic view of the industry, working for a core, in how, as credit unions, we play such a vital role, or have the ability to play such a vital role to each individual member of our community. And if we strengthen the members of our neighborhood, we strengthen the community, the county, the state, and the country, which is huge. We're in a period of great turmoil economically. We're seeing massive wealth shifts from individuals and small businesses to large corporations. Those credit unions, we've always been playing this role of helping the little guy. So how, as a vendor for me, it's all about how do I help the credit union help them the way that my credit union helped me.
Yeah.
So that we grow together as a country, and we grow together as a community into a very solid, economically safe state, because we all need that. Maslow's hierarchy of needs, that financial well-being definitely plays into that. Credit unions are a pretty important cog in that wheel, in my opinion. So that's really what has driven so much about why I love credit unions, and why I've committed so much of my personal adult career and life to being such a passionate credit union advocate. And what is exciting for me about helping them from a technology aspect to be able to do that, because it's a reliance we all have.
I think for starters, I just want to say thank you for sharing that kind of personal level. It definitely explains a lot of that passion. And it makes me feel really silly for my story of why I love credit unions so much. I was a knucklehead who didn't realize that when you swiped your debit card, there was supposed to be money on the other end of it. And thankfully was taken in by a credit union and shown the ropes. Quick shout out to Cutting Edge and Mayrie and Brady and the team. I owe it all to you guys. So Amber, as you look at, because I couldn't agree more with you, I think right now is really credit unions' time to shine. I mean, we've all been waiting for the chance to show just how important credit unions really are to the financial stability of this country. And when you look back on, events of the past, and we look back in the mortgage crisis and the role that credit unions played in helping us get out of that. I think we're in a very similar, if not even more exacerbated scenario of that today, right? So what opportunities do you see for credit unions to really step up, to shine? And I don't think credit unions need to change a ton. I don't think that they need to change, because what the country is looking for right now is what credit unions have. But what are the challenges and opportunities they have to make sure that gets out in the forefront and that they're able to really show the country how important they are and how much of an impact they have?
Yes, I think that the real answer to that is culturally, we've already all been doing this, right? This status quo for credit unions, like boots on the ground for such a long time talking about this. And what has always, I think, been a challenge for credit unions is that we don't always get the opportunity to make enough noise about it. Like, we don't always like to toot our own horn as an industry either about how great credit unions really are and what are we really doing for our community. It's not all about having lower rates and better fees. It's so much bigger than that. Talking about how, again, you're supporting those communities around you and being super noisy about that so that everyone else can understand that. I think we still hold roughly 10% of the financial business of the country. That hasn't changed in decades. And I think the reason for that really being is we've got to keep making noise, and we've got to keep making sure that you get in front of your community members at a high level, and that it's not just word of mouth, or it's not an expectation that we understand what credit unions mean. My 23-year-old still doesn't totally always know what credit unions are, and she grew up in one. It's this constant kind of reminder of what separates us from the competitors, and especially now with the Venmos and the PayPals and the Facebook money transfers, and that, Google wants to start a bank and Amazon wants to start a bank. So it's going to be more important than ever, in my mind, that credit unions really focus on speaking their truth and what they've always been doing, and making sure that we continue advocating at the local and national level for credit unions.
Yeah, that's a really good point, Amber, because you look at major industry, right?
Yeah.
Major areas where you as a business can own a very large share of money. Mm-hmm. And you look at things like commerce and retail, right? You've got some major players in there. You want to go fight Amazon? Not likely.
Yeah.
You look at automotive, you've got your big key players there. Mm-hmm. You look at housing, you got a wide range of players in that. Yeah. But the other big one is financial services.
Yep.
And with the advent of so many financial services going digital, it opens up a lot of opportunity for some of these different Amazons and Facebooks to encroach into financial services territory. Mm-hmm. And I think I really agree with you on the fact that the differentiator is not just rates and fees.
Yeah.
Yeah. Amazon does a great job of telling me what I think I might want to buy from Amazon. And they give me a really great digital experience, but Amazon doesn't care about me as a person.
No.
Right. And I know that. And neither does Bank of America. No offense. But Cutting Edge does. Yep. They know who I am when I walk in. They know about my financial position, and they know how to help strengthen my financial position as an individual. And I think that's where it's up to us, like technology providers, to help enable that and help them compete.
Yeah, I personally feel like we have to be honest. When you start talking about what does it mean for us as a society and a culture if every single thing about how we live and operate is run by Google or an Amazon? Right? What does that really mean for us stability-wise? Can we withstand large-scale events like pandemics and large-scale natural disasters or anything like that if everything that we rely on is really housed by one or two or three large organizations whose sole purpose is to just make a lot of money? That's, to me, feels scary as a consumer, that I would be at their mercy to that degree versus my local and community banks who have ties to our community and who have a vested interest in making sure communities survive events like that and can continue to thrive and have small businesses available and provide opportunity. Those big conglomerates, what opportunity are they providing to my neighbors to start a business and live out their dream? Not much, but Wasatch Peaks down the street here, my credit union, that's absolutely what they're interested in doing all day long. So I feel like we don't always maybe think about what does that really mean with this transfer of business and stuff into these large conglomerates, and how do we compete against that? And we have to do that with technology. That convenience is where they're competing with us against, right? They aren't competing with credit unions over how well they take care of you. They're competing on convenience. So as credit unions, how do we technology providers help them out? Well, it's by doing what you and I do. You're providing their members access to their financial funds through beautiful, convenient user experiences from their smartphone. The core is providing technological services for the credit unions to manage whatever user experience they wish to give from a digital channel. It's aggregating their data and helping them see patterns and find opportunities to help their members, as well as efficiencies and providing job opportunities for the people that live in the communities that work in those branches. There's so many things that we can do to help keep us competitive while we also make sure we are loud about that we're doing a better job of it and have been for a really long time.
Yeah, I want to come back to what you were just talking about with the core's ability to have an impact on an FI's ability to move fast. But before we do, I want to talk about something that you had mentioned to me before we started this, and it actually really resonated with me, and I wanted you to talk more about it. You made the comment that, okay, so especially given where we're at with 2020 and everything that's going on and the unique opportunities and challenges that brings to our credit union space, there's a fear that what happens if the Amazons do disintermediate credit unions? Or what if the business continuity plan wasn't quite there? What happens to America if our rural small town community credit unions and community banks go away? What's the danger in that?
To me, there feels like there's so many, right? Again, you're now going to see the transfer of wealth. They're going to be forced to put money somewhere or keep money home, which isn't really going to be realistic. Cash is less and less popular over time. And we're already starting to see such transition to digital currencies and things like that we got to be aware of. How are they going to even access some of those things? There's parts of this country that don't have great internet access. So how do you access digital currency if you can't even get online? So I think they're going to be faced with the challenges of what to do with cash when they do have it. I think they're going to be forced into scenarios that aren't going to be in their best interests. We talk about the consumer being able to make choices, right? They don't have any choices in that arrangement. They're going to have to take whatever somebody finally throws out to give them, whether it's a Bank of America or a Chase 100 miles away. And those institutions are not necessarily there to invest back in that community. So how is that institution 100 miles away or 1,000 miles away really putting a concerted effort on making sure that there are small businesses being funded, that you are getting mortgages to buy homes in those communities, that you can buy a car from the dealership in your community? All that money funnels into the local space. And when that leaves and starts to go back to Wall Street, who ultimately is going to benefit from it? Not that community. And they're going to eventually die out and have to move somewhere else potentially to have to do that because jobs aren't going to get created. It's such a complex issue that has so many far-reaching fingers on how not having access to financial services can really impact an area. That is really sad. And I think that's the hardest part for me of seeing the credit union industry shrink is how many of those communities were hit by that. Yeah. And what have we ultimately done to them to be able to create these thriving environments instead of consolidation into big urban hubs that maybe not everybody wants to live in? It's okay to want to farm. Like, it's great to want to farm. We should actually subsidize those somehow. Let them help us grow some food. But
help me with my herb garden in the back and chives and lettuce. And
actually a terrible gardener, and every houseplant in my house can attest to this, and that they're pretty much dead. But, I have hopes and dreams. So I think they play such a role again in that local aspect. That's who's going into junior highs and high schools and giving lessons on what is a credit report. How does a credit report work? How do you manage your bank account so that you don't get courtesy pay fees? How do you research a financial institution to make sure you're getting the best rate on a home loan or even an auto loan or a credit card? That choice, I think, is important, and the choices get limited the fewer of us there are.
Yeah. When we as digital services providers sometimes keep our little bubble hat on of digital, sometimes we tend to forget about the importance of physical branches. But I think you and I are pretty aligned here that they're not going away. That's still a really important pillar of the community.
Yeah.
And to your point, as those start to close up, especially when you look at some of the more rural communities, they feel like they lose out on the options and the choices of where they do their banking needs.
I think you're still going to see a hybrid approach. Digital is huge. I'm not going to downplay digital at all. I think it's probably at this point become an even bigger strategic decision for a CEO and an institution than the core. I think digital has far surpassed us in terms of what that really means to your branch. But that community presence, I think, is still really important and what will continue to set credit unions apart from those competitors. And the fact that the people who bank and work there live in those communities. It just creates a completely different purpose for your business.
Yeah. I've heard a couple of our credit union customers use the exact same phrase, and I'm curious to get your take on this, of we're in a place of kicking the can down the road right now. What do you see as some of the challenges that we're going to face in the next 12 to 24 months? And what are the things from your position as a core provider do you think that credit unions should be looking at and thinking about to help set themselves up for success with a rock solid foundation as we start to see some of the ripple effects of what 2020 has caused?
Yeah.
And that's not assuming that the aliens land.
Yeah. Who knows what's going to happen when they get here. I do think that the digital strategy and the technology strategy is going to play a huge role in that. I mean, I think about things when you talk about like community presence, it doesn't always have to necessarily be a physically manned branch. It can be a kiosk in your local high school, or we have credit unions who are talking about putting banking kiosks in churches and things that where members of the community are going to be going for other reasons, but still have access to be able to grab some cash or deposit a check or apply for a loan or whatever the case may be. Get a new card. There's no reason you can't put a kiosk hooked to an instant issue debit card machine somewhere and let them walk in and self-service with that. Still provides a service to your community based out of a true commitment to the financial well-being of that community, right? It doesn't always have to be the branch and people. I still love the branch and people and think we need them, but that strategy of looking at how do we create personless touch points if we need to that still allow us to have a presence beyond an ATM machine. Looking at that, of course, digital banking, everybody's expectation is to be able to move money however they want to and manage their money however they want to from the smartphone. So you do have to still provide that. But at the end of the day, we see study after study, survey after survey that members do want to be able to talk to someone when they need us. And credit unions, I think, are best at being there when they're needed. So I think it's three-pronged. You still have to look at how are you going to create that intimate presence and support the community. And maybe your presence in the community isn't a branch anymore. Maybe it's participating at your chamber of commerce. Maybe it's participating as board members for various social causes in the communities. It doesn't have to be a branch to still support the community in some way. But then how do you also make sure they have access digitally in the way that we're accustomed to? And then get creative with how you create a presence in the community that doesn't maybe rely on a branch and people, with looking at self-service kiosks and things that can do anything your tellers can do.
Yeah. I think we have a whole nother podcast already scheduled because I want to talk about kiosks.
You can do with them if you really want to. You can set up every single thing ultimately that a teller would do digitally if you really want to.
Yeah, everything from complete new account opening, loan origination, credit card issuance.
Give them a cashier's check. I mean, all
you name it.
Things that we used to look at barriers to digital and require branch, I think those barriers are gone.
Yeah.
The barriers are knocked down with technology and APIs. And again, a whole other podcast could go into that. But it creates an opportunity for a credit union to still create presence and support within their communities of interest and where they've committed to be.
I agree. I think, when we look at digital banking, one of the things that I think is important is we recognize digital banking is the self-service channel. It's the channel that members want to use when, quite frankly, they don't want you. Yeah. I don't need help. I don't want to call. I don't want to drive into a branch. I want to do it myself.
Yeah.
But if that's all digital banking is, it's a really cold touch point. And it actually detracts from credit unions' differentiators from the big banks.
Yeah.
So it has to be both. It has to be a self-service channel, but it has to be a very high-touch, one-to-one communication portal as well.
Yeah, love that.
And then, it also needs to, and this is on both on us, on Core, on all of the ancillary third-party services that credit unions use to digitally and automatedly. I don't think that's a word.
Not a word. We'll coin it though.
Okay, I like it. Kevin's on it. He loves the scrambled together words.
Yeah.
No, but to automate a lot of the back end processes, right?
Yep.
So if we can create not just efficiencies for members on the end user facing side of things, but if we can also create efficiencies on the back end, and where maybe it took a team of 10 to process checks, now maybe it takes a team of 1.
Yeah.
So what can we do with that 9 people? That 9 people can go support the community. They can be a part of grassroots efforts to help strengthen that community, to provide opportunities, to provide education, and to then have the time to, when a member does come and sit down in front of you. Man, when somebody goes out of their way, especially today where I got to mask up, I got to, hose myself off in Lysol when I get home.
Yep.
If I'm going to go out and I'm going to sit in front of somebody, that's important. That's a big deal to me. And so it also affords the credit union the time and the opportunity to really dedicate to them and express that differentiation, right? We're really and truly here for you as an individual. So I think technology plays a really big role in helping credit unions to really efficiently be able to do things that are not just the menial tasks.
Yeah, and I wholeheartedly agree. The more I could have freed up, I think back, it's been a while since I ran a branch now, but I think back to the branch that I was running for the credit union and where we were located was very central to a lot of small business in our area. I would have loved to be able to send 4 of my 5 staff out to those businesses asking, hey, what do you guys need? What do you need to thrive? What's going to get you guys to the next level for your business? How do we help support you in that? And really gathering that information face to face, because it would have done a lot of things. 1, I'm going to get a lot of market intelligence out of that from building a business at the credit union. But 2, and more importantly, the relationship that I build from that particular piece to the puzzle is huge, right? The loyalty to that, the referrals that we're going to get out of it, and it's just exponential in that particular way. And technology has given us the perfect opportunity to be able to change our business models just a little bit to do that. Communities used to come to us because they needed to, but they don't need to now. So what do we do as credit unions to go out to the community and participate with them in that way, which I think they're great at. I think they do it in various ways now. It's just, is there opportunity to step that up a notch even more?
Step it up.
Than we are.
Yeah. So I have a little bit of a loaded question for you. How do we as technology providers screw that up? How do we get in the way? How do we keep credit unions from being able to do that?
There's lots of ways that we can do that. I think if you are technology providers who are hell-bent on maintaining old infrastructure and architecture because it works, and I use quotation marks when I say it works, because that depends on your definition of working, but who are running on 30 and 40-year-old software platforms and expecting that to manage what has of technology everywhere else. It's just ludicrous to me that we have credit unions running core data systems that are 40 plus years old. It blows my mind every day. Because these new technology things that are coming out, these fintechs or products, people like Tyfone and other digital banking channels are built in a way that doesn't even recognize the languages and architecture used 40 years ago. We've evolved so far past that. So when you talk about it works, yeah, it's sort of like you took a sledgehammer to a square peg and then hit it as hard as you can into that round hole. And it sort of kind of functions and creates this weird clunky experience that isn't really that useful to your end user. So I think when you have those types of technology firms that aren't willing to make the investment in themselves to keep up with what the pace of technology everywhere else is doing, that's a red flag. And I think we become a roadblock to credit unions really fast. And that's just on the technology side. Let's not talk about how much it costs to get the sledgehammer to bang that square peg into that round hole, and the time and lost efficiency that gets created from that too. So that's one. I think when we don't invest in keeping ourselves as modern as the credit unions are expected to keep themselves, then we get in their way all the time. Two, I think that technology providers can make the process really clunky for credit unions when they start to get into nickel and diming pricing and surprise costs and stuff like that. I mean, that happens everywhere, not just technology, but it's prominent in core space anyway, where there's a lot of surprise costs that come into play and they don't always get to recognize or get passed on the benefits of scalability. Then we're going to get in the way of some credit unions too. Margins are thin at credit unions. So you have to be really conscious of that particular fact. And then third, for me, I feel like a danger that can happen in cores is you can't be everything to everyone. So when you try to build what you have to be everything to everyone, I think you just get a mediocre experience. So tech companies can get sometimes tunnel visioned that they can do it all. And I disagree with that. I don't think we can always do it all. And what we should be doing instead is seeking opportunities to collaborate and cooperate amongst ourselves to really create, I don't want to use a buzzword here, but really create like a seamless experience for consumers and that helps support the credit union industry. So I think there's a couple ways we can get in their way. And they unfortunately, they rely on us. Like $50 million credit union is not going to go develop their own digital banking channel.
Yeah.
They could never afford that. So we've got to make sure we find ways to work together to help support them because it's the right thing for us to do as credit union providers.
Yeah, I agree. I'll give you the shameless plug. It's one of the things that I really respect about the Prodigy team. And it shows in the interactions that we have with you and that we hear in the marketplace about Prodigy and your team is that our technology can be really cold. Yeah. Unless there's a relationship with the credit union and the service provider.
Yeah.
And sometimes I think that gets downplayed too much. Mm-hmm. And I think there's a lot of importance behind, at the end of the day, you're looking to extend the relationship that a credit union has to their members. Mm-hmm. And if you're putting this artificial barrier to make that happen by putting a cold technology provider mm-hmm. that doesn't have the same credit union to member relationship between credit union and vendor, then there's a disconnect.
Yeah. I don't want to sound a little too egotistical here, but I feel like personally, when the board chose me to take on this role, part of that was my personal connection back to credit unions and members. I think they saw that as an advantage and an opportunity to how I would choose to operate business and how I would choose to run a technology company that services members ultimately. It's really easy to look at credit unions as clients or users, and they then in turn look at us as a vendor. And when you use those words matter, and the emotional attachment to those words are important. One of the things I talk with my team about all the time is that's not how we ultimately view these people. They're family members. Their members are our brothers and sisters. They are our mom and dad. They are our cousins going off to college for the first time. They are our niece buying their first car, whatever that is. We all know what that feels like when you're in that space, and being able to frame that for my team and focusing on that, I think will play out in how, as a technology company, we approach servicing those credit unions long term. There's another rant about how technology companies could view their clients differently.
I love it. That's why I brought you on here, is I just like to poke the bear and get you to rant.
Yes.
I think one of the things that I would love to actually talk to you about more, I definitely think, we have plenty of podcasts for days between the two of us. You made a comment about the ancillary fees and things. And I think that's something that we see fairly prevalent in our industry. And I've actually been talking with John Sanfilippo about co-opting some information around the difference between TCV and TCO. Mm-hmm. There's a difference between the total contract value represented on that piece of paper. Yeah. And at the end of that contract, what the total cost of ownership of that product really was.
Yeah.
And how it's really important, while it may be very difficult to identify that early on, but looking for the types of service providers that take that mentality of this is really and truly a relationship, and we want it to be a long-term relationship. So it's not a let's get you in with some slick pricing early on and then make it up on the back end.
Yep, for sure. And again, that's just all in the philosophy of the business models and things like that. Makes me a big advocate of the CUSO model because that's all about aggregation and collaboration and what's kept me in those cooperative business models through my whole career. But I agree wholeheartedly with that statement is what does that really mean? And, for me, I'd rather look at it as what's the total cost of partnership. I wouldn't even use contract value or return where we land at the end as partners.
Yeah, there shouldn't be an end.
When the aliens get here. And we're like, listen, you guys don't need this stuff anymore. We can, look back and say, this is where we landed. This is what we had.
Awesome.
Now we're done and we're going to beam up to whatever solar system. Start over again. Start a credit union.
Start over again. Start a credit union.
Start a credit union.
Job number 1, start a credit union.
Right.
I love it. Amber, it's just such a pleasure to have you on this. I use you as one of my sources of getting good information about what's happening in the industry. So I'm sure our listeners would be curious to know, where do you get your information? What types of things do you follow and how do you stay on top of everything?
Okay. So everywhere. I'm a learner by nature and I like to soak up information like a sponge. For me, it's all about participating in the industry by means of every publication, podcasts like this. Obviously, conferences are always a huge source of information, things like GAC and the CUSO and NAFQ conferences. Those are always fantastic sources of info. But my favorite is really talking to the credit unions, right? They're in it day to day. They're the ones that are on the front lines, and being able to chat with those tellers and those loan officers and those branch managers and, of course, the executives about what they're facing operationally and strategically is my favorite way of getting information about what's happening out there and how do they see their role in helping the communities that they serve. But yeah, highly recommend all sources.
All the things.
All the things. Here at Prodigy, I give everyone a budget to pick a piece of artwork that speaks to a cooperative principle they put in their office to remind them of our purpose. And mine is education. And so you've probably seen that graphic where it's like all the data coming into the black and white side of the brain, and then it comes out really colorful. That's the one I chose because I like to collect all that information. We aggregate it together, we collaborate on it, and then we spit out these really beautiful, creative, innovative solutions on the other side as a group. So I don't know how I got to that point, but maybe end right there, why all the things is a good way to approach it.
I love it. Amber, how can people get in touch with you and how can they learn more about Prodigy?
Yeah, so you can follow me on LinkedIn is probably the best one. Look for Amber Harsin, CUProdigy CEO. We do have a Twitter page as well. It's Prodigy CUSO, if you're looking for the username there. And then for the company itself, I welcome everyone to take a look at the website, which is www.cuprodigy.com.
Great. Thanks, Amber. Seriously, such a pleasure. Thank you so much for being on here. I always love talking to you, and I'll probably end up calling you next week anyway. So
same, yeah. At least exchange a text at some point.
Thank you for joining us on the Digital Banking Podcast, and we will talk again soon.
Okay, sounds good.
Thanks, Amber.
Thank you for listening to the Digital Banking Podcast powered by Tyfone. Find more episodes on digitalbankingpodcast.com or subscribe on Apple Podcasts or wherever you listen. Tyfone. Everyone builds features. Not everyone builds relationships. We build both.